Statistics Canada reports that the annual inflation rate for June rose 8.1% compared to a year ago. This marks inflation's hottest pace in nearly 40 years. In addition to high food and gas costs, Canadians experienced a surge in prices for travel-related services. But some economists are predicting Canada's inflation rate may have peaked in June, as gas prices are already on the decline. However, one professional says this uncertain time might present an opportunity for investment. Joining us now to tell us more about this opportunity is Brendan Caldwell, Director of Caldwell Securities Limited. Brendan, welcome back to Forum Daily.
Thank you, Nima. Before you get started, though, I must correct you. I don't know that travel has gone up, but attempts to travel have. Whether they've been successful or not is a whole other issue. But you had questions.
Fair enough, Brendan. Now, right now, we know inflation, recession, and rising interest rates continue to be on everyone's minds. What are your thoughts on this, Brendan?
With so many, first off, people tend to talk about things about which they can do nothing. So people talk about the weather, but nobody does anything about it. So too with inflation, rising interest rates. And everybody's wondering, what this means or how will this affect? And people talk about things, I guess, to try and relieve the tension. But I do think there's some actual things that people can do when this uncertainty is at its highest, when the tension's at its highest. That tends to be where the opportunities are, or when the opportunities are.
And the major concern here is the big R word, Brendan, recession. But what happens to interest rates if we actually do move into a recession?
Well, it's a funny thing. So I'll try and unpack this in 30 seconds or less. But what the central banks, the Bank of Canada and the US Federal Reserve are actually trying to do is create a recession, or at least create an economic slowdown. Because the theory is if they raise short-term rates to the point where they're now higher than long-term rates and they raise the cost of borrowing, this will slow down the economy such that inflation rates will come down and everything will normalize. And it'll be like the last 20 years have been, where we've seen flatlined inflation, flatlined interest rates, nothing above 2%. Nobody needs to worry. The tricky part, though, is that this is not just like it always was before, in that, as you mentioned in your intro, there's lots of external factors other than a normal national economy overheating that are causing these high prices. So not sure that rising interest rates are actually going to fix it. Nor am I sure it's going to cause a recession. To have a recession, you generally need people to be thrown out of work. And as things stand, at least at the moment, it's pretty hard to find people in our business, in any business. We may be the only two people working, you and me, Nima, because it's so hard to find people to come to do any job.
All right, Brendan. Well, instead of worrying about everything, you've said that this is an opportunity for investment. So how so, Brendan?
Well, again, I think as alluded to, the best time to do something is now. And the absolute best time is when everybody says, definitely not now. Things are too troubling, too worrisome, there's too much of this, there's too much of that. There is always going to be something. That's what the news is for, is to make one anxious, worried about things. But when people are particularly anxious and worried, as they are right now, that is when the opportunities are. The worst time, if there is a worst time to invest, is when everybody's sure it's going to go straight up forever. Because once everybody is sure that everything is fine, it's not going to be fine. So here, you're not, at least now you're not overpaying. Doesn't mean you take everything you have, and it certainly doesn't mean you actually borrow money against your house or anything else. It does not mean you borrow money to invest. But if you have $100,000 to invest 10,000 of it. If you have 10,000 to invest 1,000 of it. Take this opportunity to do a little bit, and whether markets go up or down from this point forward, it'll make it that much easier to do a little bit more.
All right, Brendan, we've got a quick 45 seconds left here, but do you see any relief for investors, for Canadians in general, in terms of these rising prices and inflation?
Well, it actually can be very good for companies, because for the last 30 years, literally since I've been in the investment business, you can tell by the gray hair, it's been a little while. Companies have not had the ability to raise prices. The only way to increase margins, the only way to increase profitability is by lowering costs, by technology, by outsourcing. Well, now companies, for the first time in literally the 30 years I've been at this, have the ability to raise prices. So this, in a perverse way, can be actually good for companies that can expand their margins by raising prices. So you've got a situation where stock prices are down, yet the company's ability to raise their prices and raise their margins is actually up. So you may be right, Nima. This might not be a bad time to get started investing.